business growth through access to capital, access to connections, and access to contracts. So we also offer no cost one-on-one advising sessions. So I am not a tax expert, but hopefully after Mike gives these great explanations, we can further do research and hold our one-on-one no cost advising sessions. And please sign up for them if you have any questions. We can always answer your questions, or we have resources to turn you to. On a scale of 1 to 10, how much energy do you have about your business today? If you just put it in the chat, I would love to see. If you are high energy, that's a 10. If you are very low energy, that is a 1. I'm going to say I'm an 8 today. Oh, 15. That's amazing. Wow, you're way off the charts. Chandria, I want to say. Wow, 7, 8, 7. Fantastic. People are pretty high energy today. So Mike, that should be great for you. Tiffany is a 7. Catalina is an 8. Fantastic news. So I want you to know that we are always here to help you. And I'm going to introduce Mike so he can get started, because I know he has a full hour of good information for you. So Mike is a senior stakeholder liaison for the Internal Revenue Service, working out of their Chicago, Illinois field office. Mike has been with the IRS since 2002, working as a revenue agent, SBSE exam division in Downers Grove, and since 2009 in the role of stakeholder liaison. Mike holds degrees in business administration and accounting from Indiana University, an MBA from DePaul, and he's working, or maybe you've already completed your Master's of Science in Taxation from DePaul.
Yes.
Okay, so you've a Master's of Science in Taxation. So it's from DePaul. So I'm going to let Mike go ahead, and I'm going to stop talking. But welcome, everyone.
Thank you, Maura. And thank you, everyone, for being here today. I am Mike Bedronczyk. I do work for IRS. And we want you to know that we're here for you as well. In my previous position, the revenue agent, I did do examinations of small business owners, and I saw firsthand how much you guys mean to the economy and the generators of jobs and economic activity. So I'm very happy to bring information that we believe is going to be very valuable to you today. And today, this is the 7th of 8 lessons that we have in what we call a small business tax workshop. Today, we're talking about employers who have employees who need to make deposits of employment tax to the IRS. And in addition to making the deposits of the employment taxes, and we'll explain what employment taxes are, in addition to making deposits of these employment taxes that you're withholding from your employees' pay, you need to also report to the IRS on an employment tax return what you've withheld from your employees' pay. So just give you a little background. I work for the IRS, and the IRS is my employer, and I'm going to have withheld from my pay by the IRS federal income tax, Medicare tax, Social Security tax, which is what we call employment taxes, payroll taxes. Employment taxes and payroll taxes are one and the same.
Mike, I'm sorry to interrupt. I don't think we're seeing you're moving the slides. We're still on the cover slide.
I haven't yet.
Okay, I'm sorry. My bad. Sorry.
I'm sorry. So just to give you a little background. And so this is what we're going to be talking about today. We also want you to understand, after today's hour that we've got with you, that there are resources available for you at irs.gov. This is a screenshot of the employment tax resource page. You can see the links there in the middle. There are links to take you to information about understanding employment taxes, depositing and reporting employment taxes, which is what we're talking about here today. Employment tax due dates, and we'll describe that here in the presentation a little bit. The correction of employment taxes, unfortunately, we do see mistakes being made on employment tax returns and deposits. So we give you a link to help you correct those mistakes if they do occur. And e-filing employment tax forms, which we'll describe a little bit. E-filing, we always encourage everyone to e-file the returns that you're filing with the IRS. It's the safest, most convenient, most secure, and efficient way to get your information to the IRS. You can see this is a list of employment tax publications. Employment taxes is not necessarily a simple subject. We've got an hour today, and we're not going into all the depth that you can obviously get by looking at these employment tax publications. But we want you to understand, again, that there are resources available for you. The most important resources are the second, third, and fourth links there. Publication 15, Circular E, Employer's Tax Guide. It describes employment taxes. Employer's Supplemental Tax Guide, which is publication 15A, and Employer's Tax Guide to Fringe Benefits. Just a lot of resources that are available to help you. But today's overview of what we're going to be talking about, we're talking about an employer's responsibility for depositing employment taxes. Again, employment taxes and payroll taxes, we're talking about the same thing. In addition to depositing these employment taxes that you're withholding from your employees' pay, you need to file a return to report the payroll taxes to the IRS. We'll describe the federal tax deposit process. We'll look at deposit requirements and penalties that can be imposed if those deposit requirements are not met. We'll talk about the forms that you need to file in addition to making the deposits, the forms that are identifying the employment taxes to the IRS. A lot of employers are filing the Form 941, which is a quarterly return of the employment taxes. That's the most typical situation for an employer. The very smallest employers can file that return on an annual basis, and that's on the Form 944. If you're an agricultural employer, there's a Form 943. That's an annual return as well. So to start off, let's talk about employment taxes. What are employment taxes? The items that are listed there, federal income tax, Social Security and Medicare taxes. There's additional Medicare tax, which is a Medicare tax on high income earners, those that are earning over $200,000 a year of your employees. An additional Medicare tax would be withheld from their pay. For employers, there is the federal unemployment tax. So those first three items, federal income tax, Social Security and Medicare taxes, and additional Medicare tax, those are employment taxes that you, the employer, are withholding from your employees' pay and submitting to the IRS. Federal unemployment tax is a tax that is applicable only to employers, meaning the employers only have a liability for the federal unemployment tax. And that unemployment tax goes to fund the unemployment compensation system that's set up in each state, which does receive funding from these federal unemployment taxes. Now, I've mentioned that the federal income tax, the Social Security, and the Medicare taxes, those are being withheld by you, the employer, from your employees' pay. But in addition, you, the employer, have a share. You share in the responsibility of the Social Security and the Medicare taxes. So what I'm saying is this: I, Mike Bedronczyk, an employee of the IRS withholds Social Security and Medicare taxes from my pay. But in addition, IRS contributes Social Security and Medicare taxes. So it's a 50-50 split. I, the employee, have a 50% contribution to Social Security and Medicare taxes. And you, the employer, or in this case, the IRS, also contributes 50% of the total Social Security and Medicare taxes that are paid on my behalf as an employee of the IRS. You would be doing the same for your employees, meaning the employees make a contribution and you, the employer, would make a contribution to Social Security and Medicare taxes. For federal income tax, you, the employer, are simply withholding federal income tax from your employees' pay. Separately, you, the employer, have a federal income tax responsibility that's calculated on a federal income tax return for you, the employer, but that's not part of the payroll tax equation that we're talking about here. The additional Medicare tax, that's simply a liability of your employee. So if you have employees that are making over $200,000 a year, you would start collecting additional Medicare tax from your employees' pay once the employees' pay hit that $200,000 mark, $200,000 and above. But that's a liability just of your employee. You, the employer, do not have to pay additional Medicare tax. And I described for the federal unemployment tax, that's simply a liability of you, the employer. So what we're talking about here in this first section is making deposits of those taxes that I just described, the employment taxes, the federal income tax that you're withholding from your employees' pay, the Social Security and Medicare tax that you're withholding from your employees' pay, plus the employer's contribution as well. That's what we're talking about. So the question is, how often do you, the employer, pay these taxes that you're withholding? It depends on the type of tax and on the amount. There are a number of rules when you, the employer, have to deposit your payroll taxes. But the best time to make a tax deposit is the same day that you pay your employees. The way you get that done right away without any worries about missing deadlines or not having the money when it's due. We want you to understand, as the employer, you're withholding these taxes from your employees' pay, that it's a trust, that it's basically a trust fund, that these are funds that you owe to the IRS or the federal government. The IRS is making the collection for the federal government, but it's a trust fund type of tax where you're withholding it and paying it over to the government for the benefit of your employees. Okay, for those that you're withholding, those taxes you're withholding from the employees' pay. We want you also to understand that if you make a deposit late, that you can incur penalties. There are strict penalties for making late deposits. So let's get into the mechanics of these deposit due dates. Now, on this particular slide, we're talking about two different scenarios. That first scenario starts with, it's described as payroll taxes less than $2,500. The second scenario is the section where we're talking about payroll taxes $2,500 or more. So just to make that distinction. So first, if the payroll tax is less than $2,500 for the current quarter or the preceding quarter, and you as the employer did not incur a $100,000 next day deposit obligation, which we'll talk about, during the current quarter, that's obviously for very large employers who may have a $100,000 daily deposit requirement. So if you're in this first category where the payroll tax is less than $2,500 for the current quarter or the preceding quarter, and you don't have that current $100,000 next day obligation during the current quarter, you can pay your payroll tax with your Form 941. Again, the Form 941, it's entitled the Employer's Quarterly Payroll Tax Return, Employer's Quarterly Tax Return. But it's the payroll tax return for those who are reporting on a quarterly basis. And again, that's most employers. Very few small employers will file their employment tax return on an annual basis. And that's the Form 944. So that's the first scenario. In the second scenario, if your payroll tax is $2,500 or more for the quarter, and the last quarter liability was not less than $2,500, the deposit that you have to make as an employer is based either on a monthly or on a semi-weekly schedule that we'll talk about starting on the next slide. So here, if your payroll tax is $2,500 or more for the quarter and last quarter's liability was not less than $2,500, we're going to start here. You could determine your deposit schedule using a look-back period to know whether you are on a monthly or semi-weekly payroll tax deposit schedule. As you can see, it gets a little detailed here. Now, the look-back period is a 12-month period, which is 4 previous quarters, ending on June 30th from last year. And you're going to use this look-back period to figure out your deposit schedule for the current year. So let's look at an example to try to make this as clear as we can. Let's say we're in the current year of 2022. And last year, obviously, is 2021. The look-back period for the current year of 2022, in our example, is going to be June 2020 to June 2021. So that first quarter of that look-back period are those 3 months, July, August, and September of 2020. The second quarter, those months are described. The third and the fourth are also described there. That's the look-back period that you'll need to identify and review if your payroll tax is $2,500 or more for the quarter and last quarter's liability was not less than $2,500. Again, you're looking at this look-back period to know whether you're a monthly or semi-weekly payroll tax deposit schedule. So let's see, in the scenario, you've made the determination that you're a monthly depositor. So you're a monthly depositor if you're a new employer with no employees during the look-back period, or your payroll taxes total $50,000 or less during the look-back period. In this scenario, you're going to deposit monthly payroll taxes by the 15th day of the following month. If that deposit day is not a business day, that 15th day of the following month, you would then make the deposit by the close of the next business day. For deposit purposes, any legal holiday in the District of Columbia is what's used in terms of a holiday. Your depositing and your reporting are separate actions. Please, we want to make sure that's very clear that your depositing and reporting are separate actions. If you're paying monthly, you're filing the Form 941, which again is that employer's quarterly tax return, but it's the tax return for payroll taxes. And you're filing that Form 941 once at the end of the quarter, but you're paying monthly under this scenario. IRS Publication 15 is the employer's tax guide that we referred to at the beginning of the presentation, and it provides more details. We'll also, at the end of the presentation, we understand a lot of employers do use payroll tax services, and we'll give you some tips on how you can identify payroll tax services and look for the best service for your particular situation. Now, in this scenario, on this slide, you've made the determination that you're what we call a semi-weekly depositor. By looking at that look-back period and looking at your specific situation. If you are a semi-weekly depositor of the payroll taxes that we're talking about, you would deposit these payroll taxes for payments made on Wednesday, Thursday, and or Friday by the following Wednesday. You would deposit taxes for payments made on a Saturday, Sunday, Monday, and or Tuesday by the following Friday. You've got to complete the Form 941, which is again that employer's quarterly tax return. There is a Schedule B that is a part of the Form 941, which is report of tax liability for semi-weekly scheduled depositors. And you would submit it, that Schedule B, along with the Form 941. Now, more than one pay date during a semi-weekly period and pay dates fall into different calendar quarters, you would make separate deposits for separate liabilities. Again, the IRS Publication 15 provides more detail into what we just discussed. Now let's look at the situation where you are what we call a $100,000 next day deposit rule depositor of employment taxes. In this situation, if you, the employer, accumulate $100,000 or more in payroll taxes on any day during a monthly or semi-weekly deposit period, you must deposit the tax by the next business day, whether you are a monthly or semi-weekly scheduled depositor. For more information on the $100,000 next day deposit rule, we're going to point you back again to the Publication 15, which is the employer's tax guide. The deposit rules differ a little bit for some other returns, such as the Form 944 there in the middle of the screen. That's for the very small employers who are able to file this return, the Form 944, on just an annual basis with the IRS. If you're an agricultural employer, you're filing the Form 943 to, again, identify the employment taxes that you've deposited with the IRS. That is for the agricultural employers, Form 943. Hub 15 noted again there down at the bottom of the screen. If you're an agriculture employer, publication 51 is where you want to go for more guidance. Let's talk about the penalties that I briefly mentioned a couple of slides ago. It's not uncommon. We've seen it at IRS for a new business to sometimes run short of cash. But as I mentioned, these trust fund taxes that we're talking about, the payroll taxes that you're holding in trust to pay over to the government, this is money that, again, needs to be paid to the government. It is for your employees, not for you to spend as the employer or any employer. You're entrusted with these funds. That's why the penalties are so strict. So the penalties for late deposits can be large and unnecessary expense for your business, and we don't want to see that happen. In fact, if businesses, we've seen, unfortunately, businesses can fail because they don't clearly understand and follow the tax deposit rules. Don't fall into this situation. In addition, the owner of the business can become personally liable for employment taxes. And we'll discuss that. So please make sure your tax deposits are made on time. Understand the rules. If you need help, we've identified resources for you. We'll also talk about those organizations that do go and use payroll tax companies to help with this process. Here we're talking on this slide about the penalty. It's called, as you can see, a trust fund recovery penalty. So if the employment taxes, which are, again, the federal income tax, the Social Security, the Medicare taxes that must be withheld from your employees' pay, i.e. the trust fund taxes, if they aren't withheld or aren't deposited or paid to the United States Treasury through the IRS, the trust fund recovery penalty may apply. The penalty is 100% of the unpaid trust fund tax. If these unpaid taxes can't be immediately collected from the employer or the business, the trust fund recovery penalty may be imposed on all persons who are determined by the IRS to be responsible for collecting, accounting for, or paying over these taxes, and who acted willfully in not doing so. To encourage prompt payment of withheld income and employment taxes, including the Social Security taxes, Congress passed a law that provides for this trust fund recovery penalty. These taxes are called trust fund taxes because, again, you're actually holding them in trust for your employees until you make that deposit. So there is a notice, 784, that you can get at irs.gov. And everything that I've mentioned here today in terms of the publications, the resources, these are available at irs.gov. They're free. There's a notice 784 that you can get at irs.gov, and it talks about personal liability for the certain unpaid taxes that we're talking about here on this slide. So again, clarification to help you understand that responsibility. In this slide, we're talking about making the federal tax deposits and using another free resource that's available to you. This is the Electronic Federal Tax Payment System, or EFTPS. Of course, IRS has an acronym for everything. EFTPS, you can go to irs.gov and type in EFTPS in the search box, and you'll come to a site on irs.gov that will contain a link to get you to EFTPS.gov. As you can tell there in the bullet points, EFTPS.gov is a separate organization offered by the United States Treasury, and it is a free service that allows you to make these payments to the Treasury. The free service, safe, secure, available 24 hours a day, 7 days a week. You have to set up an account on EFTPS.gov. And there are publications to help you understand how to do all that. The first one is listed there, IRS Publication 966, A Guide to Getting Started. I mentioned that there are alternatives. If you're not doing the payroll yourself, Tax Pros can help you. So the Tax Pros may have the software to do the payroll taxes for you and make the payments for you as well. One big key about EFTPS, and even if you're using a tax professional or a payroll service to do the payroll taxes for you, if you're using EFTPS.gov, the EFTPS service, and you've got an account set up, you can monitor the activity going on in your account. And if you're allowing the payroll service to make those payments through your EFTPS account, you can see the payments being made, you can see the account activity, and you can monitor what is going on. And it's as we described with the penalties, even if you provide a payroll service or a tax pro with the opportunity to do your payroll taxes for you, you are responsible. You've got to monitor what is going on. Unfortunately, at IRS, we have seen situations where an employer has utilized a payroll tax service and the payroll tax service has stolen the trust funds, those payroll taxes that has been withheld from employees' pay. So it's very important for you to monitor the situation, even when you're having the payroll companies take care of those services for you. This is a screenshot to give you a visual, EFTPS.gov. Again, a free service available 24 hours a day, 7 days a week. A lot of great customer service resources for you to help you make those payments to the Treasury of the employment taxes that we're talking about. If you were to go through irs.gov, as I mentioned, there is a site within irs.gov that you could get to, and it will take you to EFTPS.gov that I mentioned down below in that box. Additional information, resources to help you with EFTPS. The first one I mentioned, Pub 966, but there are the additional publications on this site which will help you with understanding the EFTPS system. I wanted to give you a visual of the Form 941, which we've been talking about. This is the employer's quarterly federal tax return, even though it just says federal tax return, leaving some of people to think, well, maybe this is an income tax return. This is an employment tax return. You're identifying your employment taxes that you've withheld and that you're paying over to the government on Form 941. Most employers are using the Form 941. There are resources on irs.gov to help you understand it, the Form 941, and that's what you see on well, at least what I'm looking at, the right-hand side of the screen, called About Form 941. Using the Form 941, again, most employers are using that Form 941. You're reporting the wages that you've paid to your employees and the employment taxes that are due on those wages. Again, it is a quarterly filing if you're using the Form 941. You see the due dates there in that second bullet point. Making again sure that I've explained this clearly. There is a difference between the deposits, the timing of the deposits that need to be made, and the timing of the reporting on that Form 941. The due date for the filing of Form 941 is a Saturday, Sunday. I'm sorry. If it's due on a Saturday, Sunday, or legal holiday, then it's actually due the next business day. If that due date happens to fall on those weekend or holidays. Again, depositing and reporting are separate actions. Make sure that I've made that clear for everyone. Depositing payments, you're making those deposits based upon your schedule. But again, filing the Form 941 once at the end of the quarter. Now you're again re-emphasizing the point, most employers are using the Form 941 to file their employment tax information. But the IRS could notify you if you're a small employer that you're eligible to file the Form 944, which is the employer's annual federal tax return. But again, that is an employment tax return. Your income tax returns are separate from the employment tax returns. This is a visual of the Form 944. It is again for the small employers. You're filing on an annual basis rather than a quarterly basis. There is on the also on the screen, there's information on irs.gov about Form 944, including instructions and identification of those employers who would qualify for filing the Form 944. And I'm sorry, we should have included here in the presentation, but that information is available. So completing the Form 941. If you're an employer and you've got employees, one thing that you do have to understand is that you do need an employer identification number, which you can get at irs.gov. It is a free service. If you are if like you're a sole proprietor, you don't have any employees, you don't need an employer identification number. You can still get one. But if you're definitely an organization that has employees, you need an employer identification number issued by the IRS. In that Form 941, I think maybe during our discussion here today, especially when I've used my example as an employee where I'm just earning wages from the IRS. You could have a situation, especially if you're in a service industry, for example, a restaurant, where you've got employees who are earning tips, that those tips are also part of the compensation that these employment taxes are being calculated to determine. If you're providing taxable fringe benefits, which we did not get into and won't get into here in today's presentation, there's much more detail. Those are also part of the employment tax calculations. I mentioned up front the publications that are available, including publication 15A and publication 15B. Those provide information on taxable fringe benefits and tips. So again, more information that's available to help you understand the compensation that would be used to calculate the employment taxes that we've been talking about here today. So all that information is reported on the Form 941. And of course, the Form 941, there are instructions to help you put together the numbers that you report to the IRS. When you are completing the Form 941, it's a good idea it's necessary to have a record of the tax deposits that you've made. Again, remember, if you're in an employer that is filing the tax return on a quarterly basis, the employment tax return, the Form 941, you're filing it quarterly, but you're making most likely deposits of these employment taxes on a schedule that is not just quarterly, that you're either a semi-weekly or a monthly depositor. If you're a really big employer, you may be making next day deposits, as we discussed. So have a record of those deposits. That's where EFTPS is handy tool to be able to look into the system and generate reports that identify the deposits that you made. So you'll need that information when you are completing the Form 941. Let's talk about what we call a Social Security tax wage base. There's a limit on the amount of wages that are subject to Social Security taxes, and that is called the Social Security tax wage base. Once the amount that you have paid to an employee as wages reaches this wage base, you do not, as the employer, withhold any more Social Security tax. Now, the wage base changes from year to year. IRS Publication 15 shows the current year's wage base for Social Security taxes. All wages paid, however, are subject, that third bullet point, to Medicare tax, making that distinction. Now, as I mentioned at the beginning, there's something called additional Medicare tax that applies only to highly compensated employees, and that is being withheld by you, the employer, on those highly compensated employees. Again, that's a wage amount that once the employee reaches that wage amount, let's say, for example, $200,000, then the employer starts withholding the additional Medicare tax only until they get up to that amount. In our scenario, $200,000, will the employer start collecting the additional Medicare tax. So who may sign the Form 941? Now, if you're a sole proprietor, the business owner would sign the Form 941. If you're a partnership or if you're unincorporated, the authorized member, the partner, or the officer of the organization will sign the Form 941 that's being submitted to the IRS. If your organization is a corporation, the president, the vice president, or other principal officer that is duly authorized to sign these documents will sign the Form 941. And if you are using an agent, and we'll talk about that in just a second, an agent to prepare these returns for you, that agent must have a valid, what we call a power of attorney. A power of attorney is you telling the IRS, and the power of attorney form is the Form 2848, IRS Form 2848, where you, the employer, designate a power of attorney to complete the form for IRS, or Form 941 that you'll send to the IRS. So that's what that last bullet point is talking about, where you, the employer, designate an agent. That agent has to have a valid power of attorney on file with the IRS, which you would complete a Form 2848, complete it and send it to the IRS. So let's talk about the penalties and the interest. There is a penalty. We talked about making late deposits. There's a penalty in that situation. There's also a penalty if you file Form 941 late. There's also penalties if you don't deposit the proper amount. A penalty is incurred for a willful failure to file the returns or a willful failure to pay the taxes when due. Penalty for filing a false return and for submitting a bad check. Interest is charged on the total of the unpaid tax and the penalty. So you can see the severity. This is very important to get the employment tax right. I mentioned there at the top, there is an IRS notice that will give you more information about the penalties and the interest. Again, trying to reinforce the importance of getting this right. So to correct employment tax errors, and we do see errors, there is a site on irs.gov. Go in and enter correcting employment tax in the search box. It'll bring you to that particular site. We also saw it at the beginning of the presentation on the employment tax page of irs.gov, a link to get you to the correcting employment taxes. If you're correcting the returns that you file with the IRS, the correcting returns are the forms 941X that you see listed there in the middle of the screen. It's just an amended return of the return that you filed that has a couple of, some incorrect information. You want to submit the correction as soon as the error is discovered. Now, if you do make an overpayment of employment taxes, you can apply that overpayment to the next quarter's liability, or you can request a refund, as it's mentioned. We mentioned e-filing the returns. This is, again, we're reinforcing it here on this screen. You have options to file the Form 941 or the Form 944 or the 943. We hope that you electronically file. It's the safest, most secure, most accurate way of getting the information to the IRS. You can mail a paper return, but really electronically file. It's the best way to do it. You can see the benefits to e-filing. You get an acknowledgement. There's 2 ways to e-file. You can purchase the IRS approved software to submit these forms, or you can hire an IRS authorized provider, talking about the tax professionals that I mentioned a couple of slides ago. But you can go out and get the software yourself if you're going to do it in-house. You can go to irs.gov and search e-file employment tax, and it will provide information on the software that's available for you to do the employment tax returns. Here is the site that I just mentioned, e-file employment tax returns. And again, down at the bottom of the screen, the 2 options I just talked about. Option 1, I want to submit the forms myself, or I want a tax professional to file for me. I mentioned we do see a lot of employers using tax professionals to help them. This is obviously, as we've described in today's presentation, there's some detail involved with employment taxes. If you do decide to outsource payroll duties, with that third party, what we describe as a third party, someone who's helping you do this, that the federal employment tax withholding, reporting, and payment obligations, you may be handing all that over to the third party, where that third party is reporting and paying all the taxes that are described there. Please understand the employer is responsible for those duties, including the liability for the taxes, even if you do decide to outsource the payroll duties. There is an exception to liability when using a certified professional employer organization. And let's show you this. This is a resource on irs.gov. If you do decide to outsource payroll and third-party payers, information that will help you understand how to find the best solution for your specific situation. You can see down in the middle section under third-party arrangement, where employers may designate or enter into an agreement with the third party in which the third party agrees to take over some or all of the employer's federal employment tax withholding, reporting, and payment responsibilities. The following common third-party arrangements are discussed, and that you can see those under those bullet points, the different types of arrangements, including certified professional employer organization. Now, one of the resources on this site is this third-party arrangement chart to help you understand the differences between the different scenarios and to give you a good understanding to make a good decision for your specific situation. We've mentioned the CPEO, the Certified Professional Employer Organization. This was set up by the IRS. And in this situation, the organizations must meet certain qualifications and criteria set up by the IRS to identify themselves as a certified professional employer organization. You can get more information, including down there at the bottom of the screen, a public listing of certified professional employer organizations, again, to help you make the best decision for your situation. One thing we want you to understand is that there is no federal law that requires a tax return preparer to have a certain amount of education, certain credential, that anyone can set up a tax return preparation business. Now, there are a few states that have set up regulations to regulate the industry in that state. Oregon, California, I believe Maryland are three that come to mind. But other than that, there are, at a federal level, there isn't a law. We want you to understand, though, that there are individuals who have earned credentials that set them apart. And I'm talking in this situation, we're talking about certified public accountants, licensed attorneys, another credential called enrolled agent, and another credential called the annual filing season program. And let me stay here on this screen. Let's talk about these particular credentials. So certified public accountants are individuals who have passed a test given by their state licensing agency. They have done a degree in accounting most likely, and that includes an education in taxation as well. And part of that credential examination includes taxation, a section on taxation. They also have to have continuing education on an annual basis. Licensed attorneys, some licensed attorneys specialize in tax law. They also are licensed by state authorities. An enrolled agent is an individual who has passed a test given by the IRS, and they are experts in tax law and can represent you in front of the IRS if you've got an examination or the IRS is questioning anything. Now, CPAs and licensed attorneys also can represent you before the IRS. And finally, the annual filing season program. These are individuals who have passed an annual test given by the IRS. These individuals, as long as they, as long as they complete the return that they've filed for you, they can represent you before the IRS. These are annual filing season program individuals who've passed that test. if you are looking for help and you're looking for a directory, this is a directory of federal tax return preparers with credentials and select qualifications. You can see at the bottom, you enter your zip code, and it will bring you a list of those individuals who are in those categories I mentioned that can help you in your situation. Even though there's this list, we like anything when you're out shopping, take precautions, shop well, look for information from, for example, your Better Business Bureau. Check these individuals out with their local licensing agencies, their state the CPA licensing agencies, for example. You can contact the IRS organization, the Office of Professional Responsibility, and you can check into the credentials of those individuals through the IRS. So I want to thank you. We've come to the conclusion here, and what I want to do is just go through a review to make sure we've hit these points. Today's presentation was talking about making deposits of employment taxes to the government, the federal government, and filing those payroll tax returns. So again, employment taxes and payroll taxes, we're talking about the same thing. You're making tax deposits on specific due dates. We want you to understand because of the importance of these deposits and these filings with these, what we call the trust fund taxes, that there are very severe penalties involved. We don't want you to incur those penalties. We talked about the deposit schedules for making these employment taxes. We talked about the ease and the security of using electronic methods to make not only the deposits, but to e-file the returns. And we identified the resources that are available through IRS, including the one we've mentioned most often, that Publication 15. So we hope you are able to go to irs.gov, again, available 24 hours a day, 7 days a week, and look at all these resources that we've talked about here today. I know we went through a lot. I really appreciate your patience and your understanding, and I want to thank everyone for being here today, and especially the WBDC. And I want to turn it back over to Maura and see if there are any questions.
Thank you so much, Mike. So much information. Wow. Anyone have any questions? We have 1 minute to spare. No,
if you have questions, there's my contact information, so I'm more than happy to help you.
Mike, thank you so very much. It was very informative.